Steve, are you there?
I am, thank you.
Great. Well, once again, thank you everybody for participating in the new frontier of long-term care planning. This is going to be presented by Steve Kane. And Steve is the Executive Vice President and National Sales Leader for LTCI Partners. He, in this capacity, he's responsible for increasing the firm's sales through the acquisition of new individual and institutional accounts. Steve has 12 years of experience in the insurance brokerage market, most recently as a Senior Vice President and National Sales Leader on the long-term care division of Marsh Private Client Services. And he has previously been with Life Care Assurity as well. And so Steve brings a wealth of knowledge. And before I turn it over to Steve, I just want everybody to be aware that we are in a listen-only mode this morning. And we will not have the capacity to have an interactive dialogue at the end. So if everybody has their window box on the right side of their screen open, there's a little orange button. And if the arrow is pointed to the left, then that means that you're not seeing it. If it's pointed to the right, you see the whole window bar. And down about 3/4 of the way down, you'll see a box for questions and a box for chat. If you do have any questions, just type that in. Steve will be able to see that, and he will address those questions as we move forward. So I'm going to hand it over to Steve.
Great. Thanks, Mike. And I want to thank everybody for their time this afternoon. You know, in addition, I know we have a situation here where you're not able to ask questions towards the end of the webinar, but I will tell you, take a look at my email here on the screen. You know, please email me. You've got the toll-free hotline. You've got my cell phone number. I am a Pacific Coast time zone guy. I live in Los Angeles, but our headquarters are in Chicago, so be sensitive to that as you call. But I certainly want to help everybody and look forward to working with you guys on the phone here today. So, you know, what I want to do is take 35 or so minutes and talk about the new frontier of long-term care planning. I want to come up with a title that really, you know, conveyed the fact that things are changing in this marketplace, not just with carriers, but the way that we're talking about long-term care. And that's what I really want to encourage everybody to do, is talk about this stuff differently. You know, where in the past it's been positioned as you know, something to keep you out of a nursing home. This is looked at differently today. This is part of retirement planning. You know, certainly healthcare is front of mind, and the cost of healthcare in our retirement years, and that's how we're suggesting that you position it. So really, this is about new ways to talk about long-term care with your clients, whether they're individual clients or corporate clients, and some strategies that will help you have success in these conversations that are going to lead to sales. You know, I want to make sure you get off this call and you walk away with 2 or 3 ideas that you can use today. You know, that's the goal of this call. So, you know, what are you know, retirees thinking of, you know, right now? What's on a pre-retiree's mind? What's on a recent retiree's mind? I think these 3 things right here. You know, longevity, rising costs, and market uncertainty. So how does long-term care planning fit in? And this was taken from a you know, one of the plan sponsors on the 401k. You know, these slides, or this slide, or these graphics, and you might recognize it. You know, the retirement red zone, or the retirement red flags that we see out there. And longevity, rising cost, and market uncertainty. Am I going to outlive my money? You know, what am I going to do for the next 20 years when I'm 65? You know, that's what clients are thinking about. You know, given medical advances, the way we eat, exercise, there are going to be people living longer and longer. So the question is, how are we dealing with it? And I'm not talking about long-term care insurance right now. I'm talking about from a financial planning standpoint. You know, are your clients doing the right planning? Are they doing the right retirement income planning so that they can sustain the lifestyle that they're accustomed to today? Rising costs. You know, whether we're talking about inflation, taxes, healthcare. Certainly, healthcare becomes front of mind, and I'll show you in a couple minutes about the rising cost of this type of care. But you know, it just seems that more and more people have this stuff, and when I say stuff, I don't mean the insurance, but just long-term care and healthcare in general on their minds. As Mike mentioned, I've been in this long-term care world for a number of years, and if I'm to look back 10 years ago, 15 years ago when I got into it, the discussion about long-term care planning was difficult. Nobody would admit, number one, that they're ever going to need this stuff or think about this type of planning. And number two, they didn't have anybody they could connect it to. They didn't have folks in their lives that went through a long-term care situation. And I'll tell you what, that couldn't be further, from the truth today. We've seen just a different, I would say a different response to this conversation. Everybody knows somebody that's gone through a long-term care event. Everybody's got a client that has a family member, friend, relative that's been through this, and demographics are going to dictate that it's only going to happen more and more. So it's an easier conversation. You just got to bring it up. That's the magic bullet when it comes to long-term care is having the dialogue or the discussion, with your clients. Most people, frankly, don't. If you do, you're going to be able to sell this stuff. You're going to be able to protect your clients, their families. Market uncertainty. That's something that, retirees, whether they're pre-retirees or recent retirees are always thinking about. That's something that we might not be able to control as well or as much. We can certainly look to mitigate the risk of the market by doing some creative things or being diverse in our portfolios. But really the focus here is have the conversation with your clients about retirement planning. Say, hey, I understand whether it's you're working with your financial advisor or you're, working with them in that capacity. Hey, I understand that these three things are probably coming up. Or, Mr. and Mrs. Client, more and more of our clients, as we sit down and talk to them about insurance or about their planning, are really concerned with these three things. Longevity, rising costs, and market uncertainty. I'm sure you've addressed with your financial advisor market uncertainty, but let's talk about these two and how it relates to, this insurance conversation. So I suggest doing that, and it's really more of a framing thing as you look at this slide. So again, what are primary concerns of these folks is an extended healthcare event and how it's going to impact their retirement income, their family, their lifestyle, and just going to ask them these questions. And you know what, more and more of our clients have been asking us about long-term care. What do you know about this stuff? I mean, that's a great conversation starter right then and there. You notice we're not getting in deep into the nuances of the contracts and the pricing of the contracts. Really, that's our job. We're going to hold your hand and guide you through this as your partner. But just facilitating the conversation we think is critical, and do it in a way that's going to be palatable for your clients, not talking to them about the dreaded nursing home and spending their life savings in a nursing home. It's about, hey, more and more of our clients recognize that they're going to live those long lives, but they also recognize that healthcare might come into play during their lives. How are we going to deal with an extended healthcare event? Have you talked to your family members about how you're going to deal with it financially, how you're going to deal with it from a caregiving standpoint? What's your plan for long-term care? Asking a client that is going to get you to the next step and get that proposal, get that discussion regarding the insurance. So, I'm not big on statistics. I heard a great one that 42.7% of all statistics are made up on the spot. But here are some real stats, that are meaningful, that enable your client to look at this objectively. Look, we all know we're going to live that long life. We're going to live for another 18 to 20 years beyond our 65th birthday. But 2 out of 3 people over the age of 65 are going to need some form of long-term care assistance, whether it's in their home, assisted living facilities, skilled nursing. That's a reality, and the average stay or the average length of a long-term care claim is about 3.8 years. So you look at the current cost, you look at projected cost of long-term care, factoring in, whatever inflation rates you want to put in. But right now we're seeing about anywhere between 4 and 5% inflation rates on the cost of this type of health care today. So you're looking at it and saying, okay, I'm 57 years old right now. And by the way, that's the average purchase age in the long-term care industry. It's been steadily declining every year, but in 2011 we saw about a 57-year-old average of a buyer. So you look at it and say, okay, I'm not going to need this stuff until I'm 80, or let's say until I'm 87. Let's say I've got 30 years until I'm actually going to need this type of care, and when I do, I've got that 4-year event. What's the cost going to be by then? Factoring in a 4 to 5% inflation rate. Take a look at your lifestyle. Again, we're just using the average. It could be shorter, it could be longer, but you could be looking at over $1 million exposure when it comes to the cost of care, not to mention the emotional and caregiving hardships that families take into account. So, again, these numbers make sense. 2 out of 3 people over 65, hey, most people are using it for this long. And if you are to have the catastrophic, if you are to be diagnosed with something like Alzheimer's, dementia, your physically, your body might be okay, but cognitively, that's a different story. You might need 4 to 8 to 9 years worth of long-term care support and services. So I think, I wouldn't beat up your clients with statistics, but these are some, stats that do make sense when you're having the conversation with clients. So what's long-term care? And I'm not talking about insurance right now. I'm just talking about the care itself. If you need help, it could happen at any age. It could be because of an accident, sporting accident, auto accident, farming accident. It could be because of an injury, or you're diagnosed with some type of chronic illness, and you need help carrying out your regular everyday activities for a period of 90 days or more. Again, this is long-term care, not short-term care. Your doctor has to say, or in a long-term care situation, you're going to probably need care for more than 3 months. That's long-term care versus acute care or short-term care. So, we've listed here a number of things that might cause a long-term care event. It could be the catastrophic, or it could be a chronic issue. And what we're seeing more of these days are I'm here if you need me type of care. I know you have the hip surgery, the back surgery, the chronic issues that you have. I'm here if you need me to help you move to and from and carry out your regular everyday activities in your own home. Most of the care that's provided in long-term care is what we call custodial in nature. Standby assistance. It's not rehab, treatment, therapy, but it's, hey, I'm here if you need some help. And, I'll give you an example of a, 70-something-year-old that's been incredibly active throughout the years, walks a lot, plays a lot of golf, used to play sports in their youth. Because of that, they probably have, some arthritis. They probably have some chronic issues. And after that knee surgery or hip surgery or back surgery, they're probably going to need somebody to help them out at their home for a period of more than 3 months. That's long-term care. And again, it is available, or the care is being provided for, the strokes or the Alzheimer's dementia, but most of it is, hey, mom and dad can't get along anymore. We need to get somebody in the home a few days a week to make sure that they're carrying out their everyday activities. We need to make sure they're okay. That's what we see long-term care about on a forward-going basis, but the care also, a segment of the care, is also the more acute care and catastrophic care. So where's this care provided? And, in this graphic, what we wanted to show everybody was, there's a whole care continuum. Most of the time it starts at home. That's where I want to be. That's where you want to be. That's where your clients want to be. If your condition deteriorates and you need more skilled care, then there are assisted living facilities or continuing care retirement communities. Look, you see these places sprouting up all over the place under the names of Sunrise, Brighton Gardens. You see these assisted living facilities sprouting up all over the place. I live independently, but I press a button on the wall if somebody needs to come in and help me. And then worst case scenario, you've got the skilled nursing component. So percentage-wise, where are these insurance companies? I'm going to jump to insurance for a minute, paying out claims. About 80% of claims are paid to home health care agencies. Another 15, maybe 10 to 15 are in the assisted living facilities. And about 5 or 10% is the skilled nursing care. So, that's changed throughout the years, and I foresee that to continue. I want to stay at home. If and when I need care in a facility setting, I want to go to one of those high-end assisted living facilities. And then worst case scenario, maybe at the end of my life, I've got the skilled nursing component. So that's where the care is taking place. Now here's something that gently disturbs me, maybe not so gently. Here's the average cost of long-term care. You're looking at, on average, let's say between $70,000 and $80,000 a year for long-term care services. It's going to vary by the type of service you're receiving, but we're finding that the growth rates or inflation rates on home health care and assisted living are beginning to rival skilled nursing. Why? Because that's where people want to be. So these agencies and facilities are going to be able to charge more for those services. We talked about a 3 to 5 year care event. So again, projected out 30 years from now, this might be between a $750,000 to $1 million exposure financially, not to mention the emotional hardships that families go through when caring for a loved one. So let's continue and talk about the ways you deal with risk. And I want to, again, break it down to 2 or 3 ideas that you could share with your client. Here's something. Share the long-term care conversation from a risk management perspective. Whether You're dealing with risk to the market, with my money, risk to my home, my automobile. The ways to deal with risk are all the same, whether it's your personal property or your health. I can avoid, reduce, retain, or transfer risk. Well, I live in Los Angeles. We try harder than anywhere in the world, but you can't avoid getting older. Right? It's just a fact of life. You can't reduce the risk of needing long-term care. In fact, it's an inverse relationship. This morning I worked out before I came to the office, and I'm going to stay in good health. I eat pretty healthy, and because of that, I'm going to live a long life. Well, because I'm living that longer life, I'm at more risk for a chronic ailment or concern. I'm at more risk for needing long-term care services or support. So ultimately, it comes down to two different ways to deal with this risk. And you can self-insure and set aside dollars, and that includes like family members caring for you in that one, or you can buy insurance. It's that easy. So again, let's break it down to a client conversation. Mr. and Mrs. Client, we found that more and more of our clients are talking about long-term care. I've been reading more in my trade magazines and periodicals about this industry, and I've been reading more and more about long-term care, and more of my clients have begun to ask me about long-term care. What do you know about this stuff? And they'll share with you what they know or don't know. And then beyond that, you share with them, look, there's really only a couple ways to deal with this. We can't avoid getting older. We can't reduce the chances of needing this stuff. So it ultimately comes down to retaining this risk and kind of rolling the dice, or looking at insurance. Let's look at it. Let's figure out where this, what you should do. And so instead of selling across the table from somebody figuratively, you're sitting on the same side of the table with them. You've identified the risk. You're assessing the different ways to deal with the risk, and then you're going to put a plan in place. You're going to formalize their strategy for a long-term care event. And that leads into the next slide here, where this is the roadmap. Once you've identified the risk, then here's the strategy. And I've got advisors out there that use this as their long-term care insurance presentation. Once they've identified cost, you might have one piece of paper, it might be the page before, that shows what the cost is, where they live. And once you've done that and talk about, hey, it's tough for family members as caregivers, it might be not plausible, practical, for your loved ones to care for. You might not want to be a burden on them. Once you've identified that living that long life or health care is a risk, then it comes down to, okay, we got to figure out, how we're going to deal with this risk. So Medicare and Medicaid, let's talk about that for a second on the right. Throw that out. And I'm not being cavalier about that. I'm just reading more and more online or in print about cutbacks to both programs regarding these types of services. No matter what state you're in, it's going to be tough to qualify for benefits. You've got to jump through some hoops, and there's a limited amount of benefit that's being paid out, usually 3 months or so. Beyond 3 months, you're on your own. Now, Medicaid is a welfare program. It's a state, joint, and federal welfare program. You've got to divest yourself and have all but $2,000 of assets in order to qualify. So most of the clients that you're working with aren't going to be Medicaid recipients, right? They're doing the right planning, and they're not going to be Medicaid recipients. So Medicare is a good program, but it was designed for short-term care. So that's not going to be the primary funder of a long-term care event. So really, you've got two options, and I use reallocation in here. You could just lop it into the LTC insurance because you do have combination life insurance and annuity products that we really like. But really, I consider that LTC planning, whether it's a traditional product, a small group product that you're working with, or a linked benefit product, that's all insurance. So ultimately, again, you're seeing self-insurance or LTC insurance, those two ways. So self-insurance, write this one down because I failed to add this to the slide. When your clients tell you they're going to self-insure, don't ever get into an argument with them, about the financial side of self-insuring. Nobody wants to do that, and throwing statistics back at them about the likelihood of needing care is just going to create more debate. Agree with them. You might be able to do it, but humor me for a second. Let's talk about self-insuring. Let's formalize your strategy. Use that line with them. Write that one down. Let's formalize your strategy of self-insuring. Well, what do you mean? Well, do you have a written plan of care? Do you know exactly what's going to happen, who's going to care for you, where you're going to be cared for, by whom, who's going to help you manage, monitor, and adjust the plan of care? Those are real questions, that families unfortunately don't think about, when thinking about self-insuring. So here's 3 key issues that people need to think about, talk about when they say they're going to self-insure. Think about the lack of a bona fide health care plan, right? Yes, you've got money, but managing a long-term care event takes more than money. That's what I tell clients all the time, or advisors. So lack of a bona fide health care plan is number 1. Number 2 is timing. In my own personal situation with my in-laws, we went through it about 1.5 years ago, almost 2 years ago now, with the long-term care event. They came to stay for a month. They were coming from overseas to stay with us for a month and visit, and turned into a 1-year care event. And unfortunately, my father-in-law wasn't liquid, so I became the primary funder of his long-term care event. And we got a double hit here because it happened during a recession. And so timing is the issue. You don't know when it's going to happen. You don't know when the long-term care event is going to take place. It could happen when the market's flying, or it could happen, at the bottom of a recession. So timing, the lack of a bona fide health care plan, and number 3 is liquidity. Yes, you have money, but how easy is it for you to access that money to pay for this? Is it tied up into the stock market, into real estate, into your business? In my father-in-law's situation, the guy had money, but it was in South America where he lived. It wasn't here, so he wasn't incredibly liquid, so we had to do it. So what did I do? I did what families do. I figured out a way to pay for this guy's care. And I make a good living. I'm blessed, but I wasn't blessed to an extra $6,000 a month, for the care. So we ended up going into investments, and at the bottom, where we're taught not to do, we paid state and federal capital gains on it, paid a 10% penalty to get into the 401k, and it cost me $26,000 to get liquid for a $78,000 care event. There are better ways to do this. So liquidity, timing, the lack of a bona fide health care plan. But this is your roadmap. We've got advisors that use this as the framework of their conversation. Now, after you're done talking about this, your client might say, well, yeah, the insurance sounds like it makes sense. So it takes it more from an in-the-weeds, nuance of product, feature, benefit conversation to conceptually, hey, I agree that this long-term care insurance makes sense. Go find me the best product. And that's what LTCI partners can do is we'll go to the marketplace, do competitive analysis, hold your hand and guide you through the product side of it. But the conversation is going to be less focused on product. It's conceptually up front. You're getting your client to agree to long-term care planning. So, again, we're telling you, have the conversation. Ask somebody, hey, what's your written strategy for long-term care? How would this impact your portfolio and your family if you need care? Start the conversation, start the dialogue like that versus coming in and saying, hey, you don't want to die in a nursing home. And that's how the product, unfortunately, was marketed throughout the years. And what we're saying is change the framework, change it more from a planning conversation, from a product conversation to more of a planning conversation. And the conversation is going to change depending on who you're talking to. If you've got a married couple, if you have a couple with adult children or young children, I'm in that sandwich generation where my parents are in their mid-70s and my kids are young, and my folks are incredible babysitters. They live like 5 minutes away. They're always babysitting. With the last go around, the keys are jingling in the door, and my wife and I are opening the door after going out to dinner, and my 2-year-old is writing with a marker on the wall, and both my parents are sound asleep. It's like, I love you, Mom and Dad, but at 76, they can't keep up with my kids anymore. So I'm in that sandwich generation, taking care of young children, but I'm looking at Mom and Dad going, hey, God forbid Mom falls or Dad gets diagnosed with X. What's our plan? What are we going to do? I've got my own family. My brothers are split up across the state. How are we going to handle this? So, different stages of folks' lives are going to have different types of conversations. If you've got somebody who's single or widowed, they don't have that support structure or system in place for them, because long-term care becomes ever more important, or the right type of planning becomes important. If you're remarried, I found it really interesting with folks that are divorced and remarried. I love you, honey, but this is my money. I've seen a lot of that, and when you have heirs or children, they're not so keen on mom or dad spending money on the second wife or husband. So, long-term care planning comes into play there too. So, facilitate the conversation. It's going to be a little bit different no matter, depending on who you're talking to. So why aren't people talking about long-term care? It's uncomfortable. I'd rather stick my head in the sand than think about who's going to care for me. When I'm vulnerable, I'm fiercely independent, and I don't want to think about me being dependent on somebody else for my care. That's why people aren't talking about it. But what we're saying is you got to take the next step. They're not going to jump to you and ask you about long-term care. Nobody's going to come to you and say, hey, I really want to buy long-term care insurance. The only way that's going to happen is if somebody had a personal experience or somebody's not healthy, right? They've got a medical issue that they know they have and that would require long-term care, and they're probably going to be uninsurable for this stuff. So, yeah, we see a fear factor, and it's up to us to break through that wall. So here's why people aren't buying long-term care. And again, I want to jump back into practical application. These are the 4 reasons people aren't buying long-term care. When you sit with them, when you visit them, with them, when you talk about the insurance with them. And so I've always been schooled throughout the years as a sales guy, get ahead of the objections. Have this conversation with the client. So what do you mean? I mean, you sit down with the client and you've framed it the right way about the planning, about longevity, and talking about the different ways to deal with risk. And then you talk about the insurance for a second and say, hey, you know what, I just read a great article, or, I've done some homework, and I found that, really people, have really 4 reasons why they don't buy this stuff. Beyond it's too expensive and I can't afford it, because we can find something, that you can afford. We could always solve for the premium, just like you do with life insurance, and build a benefit that's going to meet your budgetary needs. But beyond, it's too expensive, here's why people don't buy it. They think it's confusing. They don't really understand the value of the coverage. A lot of my clients deny the fact that they'll ever need this stuff, and sounds like Mr. and Mrs. Client, you're not doing that. Some people are they're not as confident that the insurance company is going to be around 30 years from now, and I certainly understand that given our environment and what's been going on for the last 2 to 3 years. But I will tell you that XYZ company has been doing this for a number of years. They're priced conservatively. They're underwriting the risk conservatively. And the long-term care industry has never had a problem paying out claims. Have there been rate increases along the way? Absolutely. This is still considered accident and health insurance, and the carriers are going to monitor their profitability on these blocks of business and make adjustments. It's not something arbitrarily they can do. They have to petition the state in order to get a rate increase. But, we feel pretty good. We've done some vetting as it relates to the carriers that we're doing business with. So we feel pretty good about, recommending XYZ carrier. And then fear. Again, it's not fun to talk about, becoming ill and needing long-term care. So what I would suggest is you go to your clients and you frame long-term care. You've talked about the different ways to pay for long-term care, being self-insuring and long-term care insurance, and then get ahead of it and say, hey, we've implemented long-term care insurance plans with a lot of clients, and we find that more and more are interested in going this route. Those that don't, here's some of the reasons that they, shared with us that they didn't. And you might ask your client the question, hey, am I missing anything? What else would be keeping you up at night? Or what else would stop you from moving forward? So it's a creative way to get ahead of the objections, and I wanted to share that with you. Again, positioning is critical. How are you positioning the conversation? Is it 401k or IRA protection? Is it protecting your lifestyle? Absolutely. It can be positioned as an employee or executive benefit that I'll get into in a minute. And from an estate planning perspective, I think that's important. To position it that way, that when and if something happens, hey, this estate is buttoned up. That we already have a plan in place. We know what's going to happen financially. We know what's going to happen from a caregiving standpoint. Here's another line to use with clients that, you're doing planning 20 years before something happens, not 20 minutes after. Because 20 minutes after, I don't have any options. I go into like panic mode, where we panic as to how we're going to take care of him, or her, and where we're going to find the money to do it. And doing the planning 20 years before really enables you to have a sound, complete plan. Concierge healthcare. I love that line. We're seeing more and more of it, certainly in the healthcare world. But what does that mean when it comes to long-term care? Well, part of these policies includes an advocacy component where you have access, or your clients have access to RNs, licensed vocational nurses, geriatric care managers, folks that will come in and do assessments, folks that will get on the phone with you and providers and help you vet out the right providers, help you find the right agencies, manage the care that you're receiving. That's all included in these insurance contracts. We don't talk enough about it, but it's definitely included in these policies. Resources to help you find the right type of care and to help you manage that care during the event. So insurance. You notice that 20 minutes of this call has been on the planning, the positioning, how we bring it up, how I'm talking with the client, because I think this is the easy part. Once the client has conceptually agreed to, hey, this stuff makes sense, it's just about plugging in the right fit. We go out to the marketplace and find the right vehicle for you to provide your client. And so what's the insurance? It's basically dollars to reimburse your clients for their care and healthcare advocacy. It's going to be dollars that are going to be reimbursed, whether it's skilled care in a facility setting or at home or assisted living facility. It could be custodial care, I'm here if you need me, or it could be skilled. And not to get in the weeds too much, but I want to for a second. Mechanically, how does it work? I give money to the insurance company, and they invest it. And this is still considered a senior market product, so they're limited on where and how they can invest the money. And by state statute, at minimum, and it depends on where state you're in, but at minimum, 65% or 65 cents on every premium dollar has to go to reserves to pay future claims. So there's highly regulated. I've got to sock away a ton of money as a manufacturer, as a carrier, to pay future claims. When and if my doctor certifies that I need care, that I have an extended health care event, I'm going to need care for more than 3 months, I need help with my activities of daily living, or I'm diagnosed with something like Alzheimer's dementia, when that happens, I meet my deductible period, and then benefits kick in. So that's it. I'm giving money to XYZ company. My doctor, not the insurance company's doctor, certifies that I need care. And then when that happens, I meet my deductible period, and then I'm reimbursed based on my actual expenses incurred. That's long-term care insurance. If you understand that, then you get it. You could design a plan that basically has a pool of dollars available. So I'm socking away money with this insurance company. When and if I need it, I have access to this benefit pool. And I dip into it, whether it's for home care, assisted living, skilled nursing, I'm dipping into that pool of dollars. Let me give you another example. Let's assume that we designed a plan today for $4,500 a month of benefit. And we said, okay, well, how long do we want that money to last? What's my pool of dollars? Well, there's a benefit multiplier. I don't want you to get caught up on, is this a 3-year benefit, 5-year benefit? It's really a multiplier to get you to a pool of dollars. So $4,500 a month with 60 months or a 5-year multiplier gives me access today to a pool of $270,000. When and if my doctor says I need the care, I dip into that pool. I could dip into it because I need care 3 days a week, or I could dip into it because I need care 7 days a week, whether I'm at home or in a facility. That's how the benefit dollars work. The 4 key components to designing a plan are my monthly maximum, which is how much am I going to be reimbursed each month, my benefit multiplier, which again gets me to my coverage maximum, my deductible period, my elimination period, how long do I have to wait before benefits kick in. I'd say most people buy a 90-day, but you have flexibility between the 30, 60, 90-day, depending on the insurance company we're working with. And then inflation protection. How do my benefits grow in value over time? With 270, that's what it starts out at today. If you added on a 3% compound cost of living adjustment, about 20 years from now, your money would double. You can add on a 5% simple inflation protection. You could add on 5% compounded, so that 270 would double in 14.4 years. You've got the flexibility to decide how the money is going to grow in value over time. There's even plans out there that are CPI-based. I will plug, we do a national conference call. We're doing one on February 19th, all about inflation protection and the different options that different carriers have. So stay tuned for invites for that. But, those are the 4 key components. You understand this, you get it. It's not rocket science. when and if the doctor says you need care, you've designed a plan with a pool of dollars that might be growing and growing and growing, and you have access to dip into it. Plus, I could pick up the phone and talk to an RN that says, hey, here's how to do it. You know, we think that these 5 agencies in your area are solid. We're going to have them come in, or we'll set up conference calls, or we'll do an in-house assessment to help you pick the right one. And then we'll monitor the situation. That's long-term care. You know, what's also important to you and to your clients is it the right carrier? You know, are the actuarial assumptions sound? You know, from a suitability standpoint, am I designing the right thing to meet my client's needs? Can they afford it? Are they going to be able to get the right type of coverage and you know, based on their care when they need it? You know, that's important. You know, is this competitive? Can my clients, are they getting the best deal from me, or is there somebody else out there that might be able to do it? You know, that's where we come in. That's where we do all that type of work to vet this. What we're asking you to do is pick up the phone and call us. Say, hey, I got a gal, I got a guy. Here's the situation. What do you think? And we'll go from there and we'll run with it. Again, the key components of the plans are the monthly benefit. How much you know, do I have in that monthly benefit pool or the account? My elimination or deductible period, and then inflation protection. Those 4 are the key components. Qualifying for benefits, I think we've touched on that before, but those are the activities of daily living. You know, you don't need to be an invalid. You know, I know those look pretty imposing, but think of the situation where a 75-year-old has knee surgery and is unable to transfer because they need to brace onto somebody's arm to help them move to and from, or they need help bathing. Not that they need help washing themselves, but there might be a 2-foot tub to get into the shower, or dressing where their leg might be immobilized, so they need help to brace onto somebody to put on his or her pant leg. You know, a lot of people always ask me, hey, what if I just invested this money? You know, I know you showed me the long-term care insurance, but what if I just took that money and invested it? And this sometimes graphically, visually, people need to see it. In this example, we just took a $5,000 premium for an individual, and that's pretty high, but you know, I'd say that on average we're seeing about a $2,500 premium on average per person. But in this case, we used $5,000 as a benefit-rich example. Today, God forbid something happened, that person would have access to $292,000 worth of benefit based on what we designed. But we also said, what if I took that $5,000 and put it into the market? And this is pretty aggressive given today's environment, a 6% after-tax rate of return. Good luck. I want that right now, and you're not going to see it, but let's say you put it into an investment and you got 6% after tax. You know, 30 years from now, what would that money look like? Well, I'd have about $424,000. Not bad, but it's not insurance. You know, take a look how the insurance grows, not only day one, what you have access to, but what it grows to over time. So, you know, some people graphically, visually need to see this. We have it on an Excel file. If you want to email us or call us, you could change the numbers around as far as the long-term care benefit, the premium, the after-tax rate of return. You could play around with everything. But for your analytical clients out there, you could show them that transferring the risk from a financial perspective makes a lot of sense. If you could see this slide, then you don't need long-term care. I apologize for the small print. What we wanted to show you is conceptually, there are a lot of ways to do this. You could look at traditional long-term care, limited payment long-term care, life long-term care combos, annuity long-term care combos, or you could self-insure. And again, this is a document that we can provide you, and you could plug in information, and it shows, hey, here's what the present value of the coverage is, here's what the future value of the coverage is, and then has some commentary on each type of plan. And it's on an Excel file, so if you know there's no way my client can afford that fixed annuity or the life long-term care combo, you can just hide those rows or eliminate those rows, and it might just have annual pay, 10 pay, and self-insure. Okay, which way do you want to go? Let's talk about tax advantages. I know many of you work with small business owners. Boy, this is incredible stuff. Federal government realized years ago that they couldn't pay for the nation's long-term care, so they created incredible incentives. As a business owner, and it's going to vary by the type of business, in general, I'm able to deduct the premium. In most cases, it's not counted into my income. I can pick and choose and offer this to whoever I want to offer it to, and the benefits are tax-free. So just an incredibly liberal legislation as it relates to long-term care versus other product lines. With disability insurance, if I'm buying it corporately, I get to deduct the premium, but I'm taxed as ordinary income on the benefit payout. Here I've got deductibility, the ability to discriminate, and tax-free benefit. And you can see here, it depends on the type of business. If I'm a C corporation or a PC, a lot of doctors and attorneys, it's 100% deduction. No matter what the premium is, whether it's from me, employees, spouses, dependents, 100% deduction. If I'm a sole prop, a partnership, an LLC or an LLP or an S corp, then there's an age bracketed table that you'll see here on the right. So I don't have to. I look at the premium and say, okay, I'm 61 years old and I'm buying long-term care. I get to deduct $3,500 of my premium. Well, that might be the whole premium. Again, I mentioned we're seeing average premiums of about $2,400, $2,500. If I'm that 57-year-old, I get to deduct $1,300 out of my $2,500 premium. Not bad. Again, the federal government is incenting folks to do this. And, you know, there's some creative things that you could do with long-term care. You know, it can be looked at as a symbolic benefit as part of your executive benefit strategy. Hey, we want to take care of you. We're not just concerned about, you know, while you're working here, we're concerned about your retirement years. So, you know, we're going to buy this long-term care benefit for you while you're working here. And you can do it over a continuous or ongoing basis, or some companies choose to do the accelerated premium payments, like a pay to 65 or 10 pay. In those situations, in addition to the great tax treatment, we're going to have corporate discounts, and we're going to have underwriting concessions. So what's the magic number? And I'm going to be very generic here because, you know, we might have folks in different states. I would say it starts with there's one company that we deal with that has about 3 lives or 3 employees that need to participate in order to get underwriting concessions. But for the most part, it's 10 lives, 10 employees, and you get discounts and underwriting concessions. There are also association discounts or employer group discounts where there's not a participation requirement or not an onerous one like 10 lives, but you just slap on a 5% discount because they're affiliated with the business, but it's full medical underwriting. Anytime you want underwriting concessions, you're looking at 3 lives with one company, and again, call or email us to see if it's available in your state. And then by and large, it's 10 is the magic number. If I've got an employer that wants to fund a piece or all of 10, or if it's purely voluntary and there's an employer that says, hey, we think we're going to be able to get 10 lives, then we're going to be able to get these discounts and underwriting concessions. So we've got about 7 or 8 people on staff internally here at LTCI Partners that focus on the group marketplace, whether we're talking about associations, small group, or large group. We've got tremendous talent on board that are going to be able to provide you all the support you need in that segment of the marketplace. But I'll tell you what, jumping back for a second, sometimes selling a 6-life, a 10-life group takes the same amount of time as it does to sell to 1 or 2 people, a couple. Business owners get it. The tax deduction usually pushes them, you know, over the fence to do the right type of planning, and they're busy. You know, they're either going to buy into the concept or they're not, and oftentimes in the individual market we see people going back, forth, as far as whether to do this or not. Medical underwriting, just as I'm wrapping up here, usually applications, phone interviews, and medical records. We've got a few companies out there that are beginning to do prescription drug screens. We're going to see more and more of that. Sometimes that tells a better story than the actual medical records. If we find out, you know, the dosages and what people are taking, it gives us an idea as to what they have. So, you know, you're going to fill out an application, or we could do it for you. I'll tell you about that in a second. Your client is going to have a phone interview conducted, and then the carrier is going to go out and get medical records in most cases. If your clients are over the age of 70, there's usually going to be a face-to-face assessment, whether it's in their home or place of business, where they want to make sure the person doesn't have a cognitive impairment, they're lucid, you know, physically they're okay, they're able to move independently to and from. But here's where it gets messy as an agent, right? Forms. I always consider myself a really good sales guy, but not a good admin guy. And I'm sure, you know, ladies and gentlemen on the phone, some of you might feel the same way. We realized that was a pain point at LTCI Partners, so we created an assisted sales process called Application Partner. Ask us about that when you call up. Basically, it's a multi-carrier tele-app process where once your client has decided to move forward with long-term care, we'll do the rest for you. We have a team of salaried consultants who will complete the applications on your behalf. There's no haircut and commission. It just takes out all the pain as it relates to these forms. So what's going to happen is you're either going to call us or you're going to go online and schedule an appointment on your client's behalf, and one of our consultants is going to call your client and conduct the interview. We're going to be completing the application over the phone or in a screen sharing format with them so they can see what's going on. We're going to FedEx them forms with sign here, tabs, and dates. They're going to get it back to us in a postage paid envelope, and then we're going to email you the agent's signature pages. So basically, once you've sold the case, you wipe your hands clean, schedule that interview, we're going to do the rest. We're going to make life easy on you. That's called the Application Partner Program. The placement rates on that business is incredible. You don't have to worry about the details. So if you want to take advantage of that, please give us a call, and we'll tell you more about it. So going back to the retirement planning and retirement readiness theme as far as changing the conversation, I did a ton of homework, not just on my own firm's 401k, but I went out there to the market and I looked at everybody. And all the 401k plan sponsors are saying, look, when you're thinking about retirement, here, these things should be on your checklist. Where am I going to live? What am I going to do? Am I going to work? What's my second career going to look like? How much money am I going to need, for this career, for this lifestyle? How much am I going to withdraw from my retirement accounts? What's my risk tolerance in my retirement years? But every single one of these plan sponsors that I went out and did the homework with said, hey, take a look at long-term care. Some of them were more forceful than others, saying, you consider purchasing long-term care, and others said, investigate long-term care insurance. But everyone out there is saying, hey, this stuff makes sense. So it's not just, Steve Kane and LTCI partners that are passionate and believe strongly that this is the right type of planning. All of the 401k plan sponsors, all the retirement planning specialists that I've been talking to lately have saying, hey, that makes sense. It makes sense to objectively look at the risk, look at the ways that families deal with it, and insurance is a good way to manage or handle that risk. So with that, what I'd like to do is encourage you to call LTCI Partners. You're looking at our toll-free hotline at 949-4582. That's 877 area code 949-4582. You got different extensions that get you into sales, new business, contracting, licensing, commission. But really you can start with option number 3 where you're talking to somebody in sales. We've got a dedicated team to Insurance Network America so that we know you when you're calling in. If you reference yourself that you work through Insurance Network America. And, we look forward to earning your business in 2012. Again, take a look at the website. There's a lot of incredible tools and information there about long-term care. But the easiest way to do it is just give us a call. We'll run the illustrations for you. We'll get on the phone with you and your client, and not just the application piece of it, but if you want to have us on the phone and help you present long-term care to your clients and the quotes that we just sent you, we could do that too. And we really want to make this piece of the insurance business easy for you. I think that's our goal. So again, we look forward to talking to you. We look forward to earning more of your business, and have a great 2012. Bye-bye.